The second half of 2018 was very weak, not only because of the weakness in China, but also we had some issues in the European market. These issues didn't go away at the new year, so we see a very weak first quarter 2019. We expect a further slowdown, but we also see light at the end of the tunnel with regards to the second half of 2019. We believe that the tariff discussion will be clarified mid of the year in between the US and China, US and Europe. Brexit should be clear how the concept will look like. So we are cautiously optimistic for the second half. Things should move up to the positive sector. And all in all, we expect a sidewards movement in 2019 compared to 2018, means a production rate of around 94 million vehicles worldwide.
Now, Mr. Degenhart, I want to pick you up on your comment about light at the end of the tunnel toward the back half of this year. Over the last year, you have issued 2 profit warnings, so clearly visibility hasn't been great. Is the visibility in the business still low? And if not, what has given you more confidence that you can make a claim like that in terms of what we'll see toward the end of this year?
Well, the uncertainties in the second half of last year were mainly triggered by the discussions in between China and the US around tariffs. And in Europe, we had a specific item with a conversion to a WLTP regulation, which caused the manufacturers lots of problems in the German markets. The last issue will be gone, definitely. It's getting resolved as we speak. The second one, I think the politicians, they have to come to grips by the middle of this year. Otherwise, they know very well that they would do further damage to the markets. And this is definitely not in the interest of the US, China, and also of the European authorities. So that's why we believe we can be somehow optimistic for the second half. And another fact is that the second half of 2019 will compare against the very weak second half of 2018. That makes us believe that things will get better.
And now it's been a tough couple of days in the markets for auto stocks. Yesterday, big sell-off driven by Schaeffler after they reported that 2019 is set to be a really challenging year, in particular in China and Europe. What are you seeing in those 2 regions in terms of production?
China is the biggest automotive market in the world, with production figures heading towards 30 million light vehicles per year on a total of 94, as I mentioned, so close to a third of the worldwide production. China has set the goal to achieve a growth rate of 6.5% GDP. And they need at least a stable automotive production rate to achieve this growth rate. So we have some hope that China will do the right things to support the automotive market over the course of the next 2 to 3 months. We expect that the politicians, the government will take some measures to support the automotive sector. First. Second, we see in North America a relatively stable situation with a boom into the sales of light trucks and SUVs. And Europe, okay, we have the uncertainty of the Brexit, but also here the politicians, they cannot afford to discuss this subject for another 6 or 9 months and leave the consumers and the markets in the dark. So we will see a clarification of this discussion. That's our expectation. And we hope that politicians will find reasonable solutions.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.